Hey everyone, and welcome to our earnings cheat sheet for Friday, August 30th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. All right, Ed, so we had the big climax, so to speak, with Nvidia, but we've got a few more important earnings still coming up. So what do you have on deck for us today?
Well, it seems like can't get away from AI. So we're going to take a look at Broadcom, another AI chip maker, and then Samsara, which is an AI play as well, and also then look at Smartsheet, a software maker that's doing well.
All right, great. Well, let's start with Broadcom then. The semi designer is scheduled to report Q3 earnings on Thursday, September 5th. Earnings are expected to rise 15% to 121 per share, and revenue is expected to climb 46% to 12.97 billion, and a chunk of that coming from the acquisition of VMware. And here's why we're watching Broadcom. We'll want to pay attention to any comments on AI initiatives and how they're contributing, hopefully boosting revenue. And this one is also forming a base ahead of earnings. So, Ed, as you mentioned, can't seem to get away from AI. And this is one that's probably going to be affected by Nvidia earnings this week. And we had some positive news for Broadcom this month. It looks like rumored to have maybe signed OpenAI as a potential client, maybe has snagged a couple more clients there. So, lots of things on the horizon here for Broadcom.
Yeah, they announced some new AI related tools related to its VM acquisition. I mean, it's a chip maker, but it's also a big software play, actually. So that's something to note in there. It has pretty solid earnings growth, but decent earnings growth. That's supposed to pick up, in this later this fiscal year and into fiscal 2025. The fiscal year ends in October, so definitely expecting a stronger second half, for that. And then the revenue growth that's inflated, but just want to see that happening and see if that can continue to pick up and really get that high margin AI growth out there.
All right, Ed. Well, let's take a look at the chart because we're on the daily here. As we mentioned, this one in consolidation with a 185.16 buy point. But I guess you could also look at this as kind of maybe a lopsided double bottom base using this 177.10 as a potential buy point. There could have been an early entry in here too, around 167, maybe late last week. So, what are your thoughts on the technical action with Broadcom?
Yeah, it could definitely be seen as consolidation or double bottom base. It does look like a handle has been underway forming. So in the next day or two, that could definitely come in as well. So that would provide a lower entry based off of that high from last week. So that would be an issue there. One thing is that the rebound on the way up wasn't that impressive. Like in the volume wasn't that impressive. So it'd be nice to see if it does break out that you'd want to see some real volume. And I think that's one of the things, with Nvidia puts a wild card from the time we're talking now, but where is it going? And then what do you do with it, knowing that earnings for Broadcom itself are going to be coming up? So that's an issue. Other thing technically is that aside from that August 5th drop, you could argue that it sort of was trying to find a bottom near the top of its prior consolidation, which isn't great. It round tripped, but it was a natural place. But that August 5th just sort of knocked everything down. So it was like the top. It was sort of trading around 140, which is sort of near the top of the old base, and now, just was struggling there, but came back. But would like to see some real volume on this play.
All right. And as you mentioned, earnings growth, not super exciting, but the sales growth looking pretty solid here, Ed. So let's go ahead and jump on to the next name, and that's Samsara. The software company is scheduled to report Q2 earnings on Thursday, September 5th. Earnings are expected to remain flat at 1 cent per share, while revenue is expected to rise 32% to 219 million. And here's why we're watching Samsara. As you mentioned, AI is everywhere. We're going to want to see if strong demand for its new Bluetooth enabled asset tag equipment monitoring solution is going strong. And Ed, again, this is one that provides sensors for vehicle fleets and operations. And, CEO recently said that they see a big opportunity ahead as industrial sectors digitize their operations and move more toward AI technology.
Yeah, so that's the thing. I think people see if they're getting that momentum with new products, and when can they generate the real earnings. I mean, they sort of pick up in there. It's supposed to be flat profit. I mean, again, we're talking about these marginal things like 1 penny versus a loss, 1 penny versus 1 penny. When is that going to really get that momentum going? Because the revenue growth has been pretty solid. So at some point, the expectation is that sort of flywheel, with software and stuff or sensors, a lot of these things can be, once you get that incremental dollars, it really starts flowing into the bottom line. Haven't quite seen it yet, haven't, but I think people will be looking to see, can you really generate that? Because you see the earnings growth, it's supposed to be really strong in the current fiscal year and then the next year. So it's expected to see a nice growth. People have been betting on it. It has a pretty, generous valuation on those expectations. So we'll just have to see how that goes. But that's what I think people are going to be looking for. And again, want to see that broadening out of AI. It's just also just always want to see, where is AI working and really catching fire.
All right, well, let's take a closer look at the chart then, Ed, because this one broke out of a cup with handle buy point on 39.21 on August 13th. It's trading a little bit above the buy zone here. So, if you are watching this one, how would you want to see this set up ahead of earnings?
I'll be honest, this one doesn't have much of an opportunity now. I mean, a little while ago, because this one tends to have big moves on earnings. Sometimes it's good, sometimes it's bad. I mean, so you just don't know that there's been some big moves up, and then it often then reverses. Like, it doesn't take too long. You know, two quarters ago it bumped up, and then a couple weeks later it was falling back down. The next time it tumbled, and then a couple weeks later it was moving back up. So there's been a pattern of big moves on earnings and then sort of going sideways or the opposite direction. If you look on a weekly chart, this is just difficult. It was it's had a lot of these things where the stock breaks out and then comes deep back in. So breakouts have not been great. This last one at least was, if you bought it on the breakout, you have a little bit of space, but this is one that might drop 20%. It might go up 20%, but it's not like it's safe, even though it's out of the buy zone. It showed some nice action near August 5th on the August 5th lows, because it actually undercut the 50-day and 200-day line, but closed above that level on a daily chart. So that was something to like, it was nice to see that action when a lot of other names were really struggling. They came back and just a few days later was breaking out, where a lot of other tech and AI plays are still sort of setting up, waiting to go. But you don't know. I mean, you just don't know how this is what this is there. And it just seems like this is a really tricky one. There's a lot of people who have said sayonara to Samsara because they don't want to trade it anymore, because they've tried it, and it's gone up, but they can't make money on it. And you can look at this chart and see why it would be difficult.
All right. Well, we're going to say sayonara for now and move on to our next name, which is Smartsheet. That company is expected to report earnings on Thursday, September 5th, and the work management software service is expected to see Q2 earnings rise 81% to 29 cents per share, and analysts expect revenue to climb 16% to 274 million. And here's why we're watching Smartsheet. We'll want to see how new and lower price plans are unlocking revenue from previously free users. So Ed, this is another one that's been popping up on the radar. Last quarter, they had very strong earnings and revenue beats, and that revenue being driven by very strong growth in that subscription revenue segment. So what are your thoughts here, and why is Smartsheet on your list?
Well, yeah, is it showing stronger growth, and technically it's coming back up? I guess it's doing lower pricing and making it easier, smoother, so you can like join without such a hassle. And so they're just trying to get,
Always helps the business. I would.
always helps. It always is, because it's like, how many clicks do you want to do to get on? And so they're just trying to get a lot of these people who have been free users to come in. So that one showing some pretty, solid revenue growth, strong earnings. Again, this is one that sort of like struggled for a long time to turn profitable. It did in the last fiscal year. It's in a new one. We've already had a quarter, so that's sort of turning up there. This is a group that's doing, but while the group is pretty low, it does have like its group here, Monday.com has been doing even better. That's been a real leader. Smartsheet is now coming up. If you go on a weekly chart, you'll see that this one, is now, it sort of went sideways. They came up, but it sort of went sideways for a long time, and it's still arguably within this long range. So, on one hand, sorry to go skipping to the technicals there, but it's just like it did break out, but it's setting up against sort of, you could almost treat that as a handle to a longer consolidation going back a full year or so. And, that would be something that could be potentially be interesting when earnings come out. It'd be great if it could just settle down, move sideways a little bit, let the 10-week line catch up a little bit ahead of earnings. But just so it seems to be sort of a turnaround, or the real, things are really turning around for this and really getting to become a solidly profitable company.
Yeah, RS line looking pretty good here as well, Ed.
Yeah, it's not at the highs of the left-hand side of this consolidation, wherever you place that consolidation, where you put it in middle of 2023 or the end of 2023, RS line was higher, but it's coming back. Software names struggled, and this is one of the names that's getting up toward 52-week highs, and there's not that many yet. So, good to see this one coming back here.
All right, Ed. Well, those were some of the bigger ones on our radar, but let's take a look at a few more, starting with Zscaler, which reports on September 3rd. I'll switch back to the daily here so we can see this better. But looks like it's trying to make a move here above this 200-day line. So what are your thoughts on Zscaler's chart?
Yeah, there'll be a lot of earnings before, ahead of that, ahead of CrowdStrike and some others that will have reported. So we'll see, but it does seem like a decisive move above the 200-day line, the 200 level, maybe using 208. That could be an early entry, knowing that there's still, it's still pretty low in the base. Again, cybersecurity, some names have done well, but boy, sometimes they do not. This has had a couple of negative reports out there. One really big one a couple of quarters ago. Last one was sort of in between, sort of went back and forth on things, but it's so you don't know. I mean, this would be tricky to play ahead of time unless it's with an option. With a lot of these things, it's setting up possibly there, and it's aggressive. You'd have to decide if this is one that you really want as opposed to some other names. The fundamentals are still pretty strong. Growth is slowing a little bit, but that's also the numbers are getting the comparisons are getting more difficult. Those are still strong numbers.
All right, let's hop on over to Ciena. They do cable network infrastructure. They also post results next week. This one building a pretty long cut base with a 63.24 official buy point. What are your thoughts on the action here?
This has been one that's just been tricky. It doesn't seem to really get going, even though it's been so it did sort of clear resistance around just above 53. There was a lot of trading in that area, and it's sort of close to sort of like the old buy point from a previous buy point that then the breakout didn't last for very long. So it'd be great if it could pause here and come down and form a handle ahead of earnings. Again, it'd be nice to see, are we going to see some, steady growth? You would think that, network and telecom, like there would be opportunities here. But as you see, the numbers haven't always been that good. It's just been spotty fundamentals at times. So I want to see that get a little more solid.
All right, well, let's hop on over to Dick's Sporting Goods. They're supposed to report earnings next week. This one broke out of a double bottom base here on October or August 15th, excuse me. And still trading within that buy zone, Ed. So what are your thoughts here with Dick's Sporting Goods?
Yeah, I mean, this one doesn't have the most amazing growth, but it's one of those sort of steady earnings performers. I mean, there were some weird things going on, but generally you said high single digit, or low double digit growth. It's in a buy zone. It's like, if it probably would want to wait until earnings to do anything with this and then see if there's something available there. Relative strength line has come up. I mean, it's like that's nice. It's getting closer to those highs. We know that some of the other things, some footwear, some running wear, some footwear is doing well. So while this is in retail leisure products, I mean, you could definitely see strength in related fields that would give you some confidence about Dick's Sporting Goods too.
All right, Ed. Well, let's hop on over then to Guidewire Software. They also report next week. This one had a breakout here in May, and that kind of rolled over, but it recovered and pulled back to the 50-day line here earlier in August, and has been kind of respecting that 21-day moving average. So, what are your thoughts here?
Yeah, I mean, this is a software for underwriting in the insurance industry, which may not seem that exciting, but insurance is doing pretty well right now. So this has been doing pretty well. This has had a nice run. This is like it's almost doubled over the last year. So that's a strong performance. Yeah, I've been riding that 21-day line. If you look on a weekly, I wonder if it's, it looks like it's sort of trading pretty tightly in there. Like if you just exclude that horrible August 5th situation, it's been trading pretty tightly in there. It'd be great if it could wait for the 10-week line, but earnings are coming up, so I mean, maybe it could test it on earnings, but otherwise it may go up or down. But this is one that has, quietly been doing very well in the last year and beyond, really for the last 2 years.
Yeah, and you can see really strong EPS growth here over the last few quarters. So definitely one to watch. And Ed, thank you so much for your insights today. And that wraps it up for this season of Earnings Cheat Sheet. And as always, if you want more market analysis, you can catch Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And as for us, we'll see you next earnings season and enjoy your Labor Day weekend.